We are acutely aware of the pace of change in the industry, in particular the transition to shorter settlements, and ultimately to the tokenisation of financial markets with instant settlement.
Now, with new technology such as distributed ledger technology and the tokenisation of assets, settlement of cash and securities will be even faster, occurring instantly, or as some refer to it, atomic settlement. So what will it mean for liquidity in the financial markets? Well, I'm delighted to say we're joined now by Lisa Rossi, Global Head of Liquidity and Investment Product Management at State Street, to look at this in more detail. Hello, Lisa, and good morning.
Good morning.
Now, we saw the US transition from T+2 to T+1 for security settlement last year, and the UK is set to move in 2027. Has this change had a dramatic impact on liquidity for banks as well as their clients?
We anticipated at first that it might, but I think it's been not as great as everybody thought. We're still not at atomic settlement, as you mentioned, and we are seeing the change not quite as dramatic. And we anticipate that we will see better results as more countries, you said the UK coming on, and then also we have Asia Pacific as well.
Did issues arise in the process? And if yes, how were they handled by the market?
Well, one of the things I would say about the banking industry and the securities industry, we were very well prepared. There were command centers. We spent a lot of time preparing, and that preparation really came through when we hit the ground running with T+1. So I'm happy to say that no, we didn't seem to encounter. There were a few hiccups in the industry with some of the clients. Some pre-funding alleviated some of that friction.
And how will the digital revolution that is occurring now actually impact liquidity in the broader financial system?
Well, the first thing you're going to see is, and what's really important for our industry, is transparency. So when you have the distributed ledger technology and you have the transparency and you can have the end-to-end processing in much clearer view, automation is something we talk about quite a bit, and the reduction in manual work is really critical.
Talk us through some of the challenges and the benefits, of course, for financial institutions that settle securities in cash.
The benefits that we're going to see, I think what we're going to see first, before just the benefits, is the combination of we still have traditional rails, and then we will see, as we evolve, financial institutions sometimes are a little bit slower, or banks, than some of the fintechs that are out there and are processing, that are known more for innovation and speed. What we have that I think is critical is trust. We have the regulatory framework. Now, that's really critical right now, that the regulatory framework really solidifies. We just had in the United States, the passing of the Genius Act, and that ability to have clarity for us from financial institutions as well as the fintechs is really critical for us.
And will wholesale central bank digital currencies, or CBDCs, tokenized deposits and stablecoin replace traditional fiat in the financial markets? What do you think?
I really don't think. I think it is going to be a side-by-side. What will be really key is the rails and how we connect, and that interoperability is paramount in this industry. We've been known to have fragmentation, and fragmentation does not help us. So key will be the regulatory environment, the central banks, and the ability around the globe for them to have some consistency. That is not something we have been very good at in the past.
How quickly do you see tokenized deposits and CBDCs becoming a more integral part of the financial system, do you think?
That's a good question. It's here. If you've been at the conference at Sibos right now, I would say more than half of the topics are all around the digital new world. And it's here. We've got, certainly stablecoin has just grown significantly especially since the Genius Act. Tokenized deposits are real. There are banks that have started to work with tokenized deposits, the tokenization of mutual funds. These are all things that are happening now. And some people are predicting it's not going to fully be integrated until 2030. I think it's going to be sooner.
And finally, the big question that many of us are asking, who is actually going to come out ahead in this race to tokenize the financial markets? Is it traditional banks, fintech, or even a new entrant?
We'll have to see. I, working for a bank, think it's going to be banks in combination with fintech. We have to work together. Again, I said innovation and speed is a fintech, but the trust and the regulatory guardrails that a bank has will be critical.
Well, the race is on, but Sibos is about collaboration. So let's hope they start working together successfully sooner rather than later. Thank you so much for giving us your time here.
Thank you as well.
On day 3. I got day 3 of Sibos already.
Yeah.
Time flies.
It is flying by. That's Lisa Rossi, Global Head of Liquidity and Investment Product Management at State Street.